All right, so yeah, let's go ahead and run through it. 3 o'clock start. All right, good afternoon, everybody. Ryan Nieboda here, set to go through Corona Sanity and how you, as a member of the home building industry, can weather the economic storm that is generated by this health crisis. A quick little bit of background about me. So, our firm, No Boundaries Advisors, is an accounting firm that is geared entirely to servicing the American home builder coast to coast in the United States. I myself, in addition to being a co-founding partner of the firm, am a certified trainer for the National Association of Home Builders. I'm in a fourth generation family that has done both accountancy and also been involved with the home building industry. Why do I bring that up? Look, this is something that we eat it, we live it, we breathe it. We know everything in this business inside and out. And I mentioned this just saying, look, we're not some generalist that just talks around in circles. We understand exactly what you're going through in the field and in the office. So let's get a little bit of an overview about what we're actually going to be discussing today. We're going to be looking at, number one, how the coronavirus health crisis is actually impacting home builders right now. I know that might seem a little bit redundant because, hey, Ryan, we're living this. Well, we are, but we're also living it in different paces. I know that builders that are in Pennsylvania are feeling a heck of a lot more pain than builders that are in Florida. And builders in Florida are having a lot more pain than builders that are in Kansas. So, we're going to take a look at what the impact is in the industry right now. We're going to then discuss what you should be doing right now to make sure that your business is protected. We're going to give a little bit of a brief look at what's going on in China currently, since what we're experiencing now is what occurred in China over 2 months ago. And then I'm going to review with you the federal disaster loan program and how you can go about taking advantage of this. As we sit here today, this is the single most substantial program available to basically backstop the American economy and American small businesses. With that all being said, what right now is the impact that we're seeing on home builders? So first and foremost, the single most significant thing that we have seen here in the United States are state and local mandated shutdowns. If I could do a bit of an advertisement here for 1 second, if you are on this webinar right now and you are not a member of the NAHB or a local home builders association that is affiliated with the NAHB, I highly, highly, highly encourage you to go and join your local HBA right now. These state and local home builders associations have done a magnificent job of negotiating with local and state elected officials to have construction far and wide deemed an essential industry that have been keeping people open for business. So far, I can tell you that the New York Builders Associations have lobbied successfully to keep New York construction sites open. The New Jersey Builders Association has lobbied to keep New Jersey home building open. The Home Builders Association of Delaware has kept things open. The Home Builders Associations of California have negotiated with Gavin Newsom to reopen home building after being shut down. And I just heard word early this morning that Maryland is following suit and is going to deem home building an essential industry. To the best of my knowledge, the only state where we are still under a mandated shutdown right now is the state of Pennsylvania. And I am very confident that the Pennsylvania Builders Association is going to be successful in their lobbying efforts to have home building reopen. But the fact of the matter is that, look, we have to contend with these state and local mandated shutdowns. They are incredibly disruptive. People not being able to work, people not being able to get their inspections done, people not being able to get materials. It is creating an absolute mess out there. If you have not fallen victim yet to one of these state or local mandated shutdowns, I know we have a few people who are participating in this seminar right now that are based in southern states that I think are a little bit more unaffected by this crisis at this point in time. I feel very confident that at some point this is going to be coming to you. Next up, supply shortages. When we first designed this seminar, we were getting word that we were experiencing a lot of supply shortages for materials that were being imported into this country by China. For those of you who don't know, this coronavirus started in the Hebei province of China, major city being Wuhan. Well, Wuhan is the industrial hub of China. So an awful lot of factories that make a heck of a lot of the materials that we need in this industry went offline roughly 2 to 3 months ago. So I'm hearing that there is a vast shortage of cabinetry available, countertops, millwork, trim, interior doors, LVP flooring. So as builders, we're contending with that. Now, couple that with the state and local mandated shutdowns and just the general chaos that's being caused by the health crisis, even getting supplies here domestically right now is a challenge. We're hearing challenges from interior stair manufacturers, from exterior door and window manufacturers, steel suppliers, lumber mills. There is just an incredible disruption to the construction supply chain going on right now, and this is something that we're going to be facing. Labor shortages. Going into this health crisis, our industry is facing a labor shortage. The fact of the matter was that when the financial crisis occurred in 2008 and 2009, a lot of people that worked in this industry never came back. Now we take our already short labor pool, and now it's further exacerbated by schools being closed down and parents being forced to stay home with their children. People being required to quarantine in place if they're exhibiting any corona-like symptoms. And quite frankly, we're hearing this a lot, that people are just flat out refusing to show up for work, even if they are deemed essential because of general fear. So we're going to be contending with labor shortages if we're not seeing that already. In addition to these items, we are looking at the suspension of getting approvals for new projects. In many states and municipalities, our local planning and zoning boards have ceased to hold meetings for the time being. While I don't know that this is necessarily going to create a huge impact, unless you were an unfortunate developer that was finding themselves on the 1 yard line of getting your project approved, the fact of the matter is that this is going to severely constrict our lot supply as we enter into Q3 and Q4 of this year. Really quick, JP, if you wouldn't mind flipping over to the next slide so people can kind of follow along here with us. All right. As you heard about the state and local shutdowns, a lot of this has also led to reduced or eliminated building inspections. There are some municipalities and counties that we've heard that have either dramatically reduced the amount of inspections they're willing to do, some that are refusing to do them at all. We're even seeing an interesting dynamic. We can kind of cross-pollinate this with the labor shortages, where building inspectors are actually being ordered to conduct building inspections, and they are still refusing to do so. And last but not least, and this is a pretty significant one here, we're also observing the makings of a potential liquidity crisis in the banking system right now. Now, I don't want to sound alarmist. I'm not a banking expert. However, typically speaking, if you look at the market for mortgages here in the United States, it's pretty unusual day to day to see a fluctuation in the rates of more than a couple of basis points. The average daily fluctuation in mortgage rates in this country has been around 0.9% over the last 14 days. Why do I bring this up? There is an incredible amount of volatility in the banking system right now. And while we are hearing in the news that the banks are very well capitalized, it all depends on which bank you're working with. So we are seeing a slowdown in banks releasing funding draws for construction projects. We are seeing banks do moratoriums on issuing funding draws until they can get certain items squared away. By the way, if the inspector for the bank is under quarantine or just is too afraid to go out, then even if everything is on the up and up, we're still going to have problem getting money through our projects. So with that being said, what should you be doing right now? You know, we're entering into this crisis. We're about a week to 10 days in. What do you need to be doing? Well, first and foremost, we need to be making an effort to conserve our cash, pure and simple. You heard me mention at the beginning of this seminar that cash is the lifeblood of any business. And what you need to be doing right now is making sure that your cash reserves in the bank are as high as they possibly can be. Now, how do we go about doing this? Well, first and foremost, I've already recommended to all of No Boundaries customers, and I'm recommending to you right now that you increase your pay cycle. And here's what I mean by that. Most builders pay their bills on a regular interval. Some builders pay every 14 days. Some builders pay every 30, some pay every 45. What I'm telling you right now, whatever your pay cycle is, I want you to increase the number of days that you pay your bills by a minimum of 7 to 10 days. So if you're a 30-day paying builder, so you get a bill today on March 26th, your plan is to pay it on April 26th. I'm telling you right now to not pay that bill until May 3rd to May 7th, in that range right there. We want to be able to build up a little bit of a war chest in our bank accounts right now so we can weather a storm. By the way, if there's any subcontractors or suppliers on this, I'm sure you just absolutely want to rip my face off that I'm telling the builders to slow down paying you, but I'm also giving you the same advice. We need to just slow things down a little bit, keep a little bit more cash in the bank than we're used to having, and just making sure that as information evolves, we have enough dry powder to weather the storm. Also, in line with increasing our pay cycles, I'm going to want you to be a little bit more diligent about avoiding discretionary expenses, right? If you don't need to be making that purchase right now, don't make it. Just put the brakes on everything and let the dust settle. You heard on the previous section me mentioning about a slowdown in getting draws for construction financing. We all have pre-prescribed points in our job where we typically request our draws and inspections so that we can get the ongoing funds. Even if you are not at that milestone as we sit here today, I want you to put in your draw request. The fact of the matter is, I would be substantially more comfortable with you getting 50 cents of the dollar you were hoping to get 3 weeks from now than waiting out those 3 weeks to get 100 cents of that dollar. Get the money in your account today, because there's an awful lot of uncertainty of what's coming around the road right here. Things might clear out in 2 weeks and all is well, but they also may not. I want you to have the dry powder in your bank account. Next up, you heard about our material shortages that we discussed. I would be working closely with your subcontractors and suppliers to schedule your materials 30 to 45 days ahead of schedule. A lot of the builders we work with typically run on a 2-week schedule interval. I would be notifying suppliers of things you need, such as trim, millwork, doors, cabinetry, flooring, of when you're expected for delivery and install, a minimum of 4 to 6 weeks ahead of when you expect them. I've had a few people push back on this with me and say, well, Ryan, I can't forecast out that far. There's so much uncertainty. What if this doesn't happen? Or I've never forecasted out that far. That's okay. Typically in our industry, usually we're making last minute calls to try to get things moved up in the schedule. I am not aware of a supplier or a subcontractor where if you told them, hey, listen, I'm expecting to, need a kitchen installed 1 month from now, and then you call them up a week before and say, hey, listen, I'm not quite ready for you. Can you push me back another week? No reasonable person is going to be upset in that scenario. But that being said, I want you to have these materials and installs on your schedule that far out so that these vendors can plan ahead, get the materials you need in the warehouse, tagged to you, because mark my words, we are going to be seeing very big material disruptions far and above what we've seen up to this point. Fifth, I'd be verifying what inspections and approvals that you can get from the governing body that is supposed to be doing them, whether it's local, county level, state level. Verify that you're going to be getting the permits that you need when you need them by. Verify that you can get the inspections you need when they need them by. If you find out that you are not able to do these things, I'd be reevaluating your construction schedule. Do what you can to make sure that you're not laying out money or labor that you don't need to be. Last but not least, once we have done all of this and we've scheduled our materials out, we've conserved our cash, we've stretched our vendors out, we also need to be communicating what is going on right now to our customers. Our industry, unfortunately, has a bit of a bad reputation of not always being the best with letting customers know what's going on with their projects. This is a very stressful time for a lot of people, not just, business owners here in the home building industry, but people across the country. There is a health crisis going on right now. And in a time where we're experiencing a great bit of uncertainty, letting a customer know what is going on with their project is going to be of immense value to you in the long run. I'm not going to sit here and say that they're not exactly, they may not be happy when you tell them, oh, listen, we hit this delay or this snafu. But in the long run, they will be very grateful to you that you were transparent with them and let them know what was going on. So let's look to the future. And what I mean by the future is we're going to learn from the past. What has happened in China over the last 30 to 60 days, and we can get an idea of what we're expecting to experience here. So a couple of stats I pulled up in terms of the size of the downturn. So industrial output, factory production, off 13.5%, retail sales down about a fifth, and investment in fixed assets down a quarter. I also would like to note that what is a fixed asset? Well, in the Chinese economy, it's construction. So while we are hearing that there is a decent amount of construction activity still continuing through this crisis, it is going to be prudent for you to plan for a brief, and I don't unfortunately have the ability to tell you what brief is, for a brief contraction for what I would estimate to be 1 to 2 months until we get on the other side of this health crisis before things return to a state of normal. A little further detail, I know that China experienced its first contraction in GDP since 1989, pretty substantial. Also gave you the bit there about restaurant sales. Hopefully no one else is an investor in that industry. Very, very hard hit. A bit of good news I didn't include in my slides, though, in regards to China, as their quarantine bans are starting to be lifted this week. It does appear the pent-up activity is ready to reactivate. So if you're on this call and you're somewhere like New York, New Jersey, Pennsylvania, we're already in the contraction. If you're in other states such as Georgia, Texas, somewhere in the Midwest, this hasn't quite hit you yet. So take advantage of having a first mover, being the first to know about what's going to be coming here. In terms of some positive news, well, for anyone who doesn't go on the NAHB's Framing Lumber Index, this is what it looks like currently. So there is some good news on the horizon, assuming we can get through a quick resolution on this health crisis. We're currently forecasting that lumber prices are going to drop by roughly 30% over the course of the next 30 days. So I think that's some great news. For builders who are not nearly as conservative or prepared, such as people like you who are on this call getting the knowledge that you need, I think there's going to be an opportunity to buy land and buy building lots at a discount. As you heard me mention before, there is a lot of volatility in the mortgage market, but the fact remains that right immediately prior to this health crisis, mortgage rates were getting ready to drop to an all-time low. I know that there was some 30-year mortgage money being written just north of 3%. I expect that we're going to get back there, especially now that a lot of the stimulus that the federal government has put out has pumped massive amounts of money into the system. The Feds chopped their rates down to zero. So I think you're going to see some very, very favorable mortgage rates. I would imagine that a lot of builders right now aren't really doing too much selling. It's a little hard to have someone sign the line when you have to be doing social distancing and stay 6 feet away. But like I said earlier, we saw in China that once these things lifted, there was an incredible amount of pent-up demand that shot out, and the money is starting to flow very freely. By the time, hopefully, this health crisis is over and people are able to go out again and we don't have to worry about social distancing, we're going to be prime into the summer selling season, and we should experience a springboard-like demand. Last but not least, as some of you might have observed, we know that there's been a lot of manufacturing in this country in general that's gone away, but in particular in the construction industry, a lot of components are no longer manufactured within our borders. This crisis that originated in China and has spread across the world, I know has shaken a lot of supply companies to their core in terms of their ability to service their customers. With that being said, I genuinely believe that over the next couple of years that we will see the return of American manufacturing for the various components we need, and hopefully makes things a little bit easier for us to procure in the future. So with that being said, I have intentionally kept my presentation brief because I wanted to allow for a good bit of time for any questions and answers that anyone on this call may have. Chances are that if you have a question, there is someone else on this call that also has that same question. So, for the good of the group and the good of the order, I'd highly recommend that you ask that. I believe we have a chat box that Lauren or JP, who are helping me out here, can field any questions. We also have the ability to take someone off of mute. So, I'm going to kind of open the floor to anybody if anyone has anything here.
Great presentation, Ryan. It's fantastic, great information. So just to emphasize, I'm a co-host and I'm helping Ryan out here with this and this webinar. So there's two options for you here to post questions. There's a Q&A in your gray button where you can post a question. The other option is for you to use the chat. If you go to the bar and you hit more, and then more has a chat, you might even see a red dot there because I just asked you guys to post questions here. But this is the chance to post them. I can read them out loud if you put them in the chat and the question. Or the other option, I believe, is that you can raise your hand. There's an option on the more to raise your hand in the chat, and that way I can unmute you if you wanted to chat. Again, it's up to you, but we're here for you and support you. So let me know if there's any questions, and we'll go from there. Okay, so we've got a question here. Well, we've got 3 questions coming in, so we'll do them in order, Ryan. I don't know if you can see them, or do you want me to read them?
Yep. I see the questions right here. So I'm going to kind of start from the top. We Paul, all money in one bank thoughts. Paul, I think that all depends on the amount that someone has in any one bank. FDIC insurance is still in place, but that being said, at this point in time, if you have deposits in excess of 6 figures, I would be looking at maybe doing a little bit of diversification. Now, if you have certain covenants on various financing that you might have or whatnot that requires there to be a certain amount of money, you need to make sure that you're still in compliance with that. But I would say that my personal comfort level for any one of my customers is typically somewhere in the vicinity of around $250,000, unless I know for a fact that that bank is going to be rock solid. Without knowing more about what the bank is or whatnot, it's a little hard for me to comment on it. One thing I do want to add, though, in regards to all the money in one bank, I know a lot of builders have credit lines available to them. And if you have money available on your credit line, I would recommend pulling it down into your bank account. I would rather you pay the interest on that money for the next 30 days and have it sitting in your bank account than a bank suddenly face a liquidity crisis and withdraw that available credit to you in the future. So I hope that answers that question. We have a question from Jim about optimism about Pennsylvania soon releasing the restrictions for contractors and home builders. So Jim, my optimism on this is a couple-fold. First and foremost, from what I understand, the Pennsylvania Builders Association has been lobbying very aggressively. It seems Pennsylvania is approaching this process a little bit differently than a lot of the other states. They seem to be approving this thing business by business and not necessarily doing a blanket thing. The issue we have in a state like Pennsylvania is it's a very diverse state. You have two highly urban areas in greater Philadelphia and greater Pittsburgh, with some smaller minor urban areas interspersed in between, and then an awful lot of countryside. So I think, and while I don't know this for sure, what I'm observing is that they seem to be a little bit more willing to give waiver to businesses that are not in counties that are in urban areas. I know in particular in greater Philadelphia, Philadelphia County and Montgomery County are considered hot spots. I believe Allegheny County, Pittsburgh is a hot spot, and there's a few others in the state. So I think the government in Pennsylvania is trying to exert a little bit more control and keep some areas a bit more constricted. So, but I have been seeing a lot of businesses in Pennsylvania that were shut down now open for business again. I would highly recommend reaching out to the Pennsylvania Builders Association or a local HBA in Pennsylvania for guidance on how to obtain that waiver. Question from Greg, other stats on other commodity prices such as concrete. The only other commodity price I've seen is on steel. It appears the price of steel is coming down. I also know that I believe I read the Trump administration today waived tariffs on imported steel, which should help steel prices fall. Concrete in particular, I have not heard anything on. Unfortunately, the people that make Portland cement kind of have their own cartel, so not something I would be holding my breath on, but I haven't directly heard of anything in regards to the pricing on concrete. Got a question here from Rudy about qualifying for the SBA loan, a little bit beefy here, so give me a quick second to read it, and then I'll kind of repeat it for the group. Okay, so this is a very good one. Rudy's concern is about the qualifying for the SBA loan because he's showing net loss on his taxes. And he, look, first off, there are some qualifiers for this SBA loan that are out there. You know, you have to prove that you've exhausted all their credit and be credit worthy, et cetera, et cetera. So first thing I'd say to you, Rudy, even given this, I still would be applying for it pure and simple. The fact of the matter is they threw this out here very early on. They put these positions in place, but the regulations and how they're underwriting these loans is changing incredibly rapidly. We've processed over 50 for our customers thus far, and I would say by the time we get to the third one on the list, they introduce another layer or they change another restriction about it. So just because you think you don't qualify today doesn't necessarily mean that you won't qualify tomorrow. In terms of any, you also put out vacant land that's currently owned. I'm assuming it's owned free and clear, as a lot of builders do. Places on where you can secure a loan using the land as collateral to cover the expenses and develop our construction sites. A lot of that's bank by bank. So if you asked me this question, Rudy, this time last year, I would have told you that there really aren't too many options. However, though, I actually have seen quite a few banks begin to loosen up and lend against land. Now, what are they doing in this current environment as we sit here today? That I don't know. In terms of the greater Tampa area, I'm actually going to circle back to you on that and see if any of the banks that I know are doing land financing are working in the greater Tampa area. Actually, I do know one. Gateway Mortgage out of, I believe they're headquartered in Tulsa, Oklahoma, but I do know they have a Florida presence. They are doing loans on land, and I believe they're doing them at up to 75% LTV. So I would look up Gateway Mortgage. They should be able to help you out. If you'd like to reach out to us, we do have contacts at Gateway. I keep on calling them Gateway Mortgage. They're now Gateway Bank, but I do believe that they cover the Tampa Bay area, and I know that they are doing land loans up to a 75% LTV. In terms of other banks that might be available to you, I'd have to do a little bit of looking for you. So, other questions?
Yeah, Ryan, I got one here around just what do we need to do for the next 4 to 6 weeks in terms of what's a game plan here to execute? Just give me a financial sort of 1, 2, 3. I got suppliers. I've got staff. I've got layoffs. I've got a bunch. I've got a lead. And so what do I do for the next 4 to 6 weeks?
Well, the game plan for the next 4 to 6 weeks, first off, is all about cash conservation. We want to make sure that, like I said, we're trimming out our unnecessary expenses. We want to slow down the pace at which we are paying our vendors. We also want to be taking a look at what we absolutely need to get done out in the field over the next 4 to 6 weeks. Notify the suppliers, notify our subs, let them know that we are working. Now, independent of all that, we also need to make sure that we're taking care of ourselves. The fact of the matter is that, God forbid, this economic crisis to us as we sit here and talk today becomes a health crisis to us. All this effort we do in planning for our money and the future of our businesses is kind of meaningless. So, we also want to make sure that if we have people who are working for us that are unwell or symptomatic of the coronavirus, we want to make sure that they seek the appropriate medical attention. While I know Congress is negotiating over specific aspects of this relief, I can tell you that they have passed another very substantial piece of legislation, the Expanded Family Medical Leave Act. That will take effect on April 2nd. So if you have a team member that is symptomatic of the coronavirus and is seeking medical attention, or they're been ordered by their doctor to be quarantined because they're considered a high health risk, they will be continued to be getting paid through this Family Medical Leave Act. However, 100% of the wages that you're paying them are going to be refundable back to you in the form of a tax credit. So there is some good news there. One other item, and this just came up to me right around 10 o'clock this morning, is to be in contact with your liability insurance carriers. Apparently, in the era of social distancing, there are some concerns about specific precautions and training that contractors should be doing to make sure that social distancing is followed. For anyone who's been on a job site, as you know, it's usually pretty hard to be on top of one another. But the scenario that was posed as plausible is, hey, can I have 2 guys on a crew riding in the same pickup truck together? That actually is a real concern, that you can't comply with social distancing in that realm. So I would be in contact with your insurance company so that they can give you the appropriate guidelines, because we do want to avoid any, not just the health issues, health of our team members and our employees it needs to be foremost, but God forbid something should happen, we also want to make sure that we're protected from a liability standpoint. So that's how I would, that's what I would be looking at for the next 4 to 6 weeks. I'd also, keep in close contact with your advisors, in particular your accountants and your attorneys, probably a little bit more so with your accountants, and making sure they're looking at your numbers closely. And if for some reason they are unable to, they're shut down, we're more than happy to help someone out in that regard as well. Other questions? Well, if we don't have any other questions, I know sometimes a public forum, not all questions and scenarios can be posed in this matter. We are more than happy to answer any questions with someone directly one-on-one. You can feel free to reach out to us via our website. The website is www.NBcpa.builders. There, we're more than happy to book a brief appointment with you and address any open items or concerns that you might have. And like I said, we are available here to you. We love the home building industry. We love home builders. We want to see everyone survive. We want to see you thrive. We want to see you do well. So thank you for attending this today. Keep an eye out on our social media. We do plan on doing an updated version of this in the coming weeks. And like I said, if you have any questions in the meantime, please don't hesitate to ask. We're more than happy to help out. So thank you all for attending today.